Hi friends, welcome back. I hope you're all doing great and are staying safe. It's been a very long time since I have put up a video on my channel. So today I've come up with a very interesting topic that has created a roar in the investing market and also has attracted the attention of a lot of investors over a period of time. So the topic that I'm talking about is virtual digital assets, or as you can call as cryptocurrencies. But I have tried to bring up the taxation angle of the virtual digital assets in this concept. So, without any further delay, let's directly move into the topic. And first, let's start with some introduction. So, as you all know, that there was no such regulation that was existing in place for tracking the investing in virtual digital assets. So, this there was this conception in the minds of people that it is not illegal to deal in cryptocurrencies, and there was a lot of speculation in this market. And as cryptocurrencies developed over a period of time, people started investing, and now it has become a trend. So the Union Budget 2022 has bought in the taxation angle for virtual digital assets, and it has not left out the income that arises from the transfer of virtual digital assets. So the Union Budget has introduced a section for taxing such income, and today I'm going to explain you the provisions relating to the taxation of virtual digital assets. So let's start now. So I hope everyone can see the screen. Yes. So let's get into the concept. First, let's start with some introduction. So as you all know that there are a lot of cryptocurrencies that are existing in the market, and Bitcoin was the first cryptocurrencies to hit the market in the year 2009. So some of the other popular currencies are Bitcoin Cash, Ripple, Litecoin, etc. And India has the highest number of crypto owners globally. Since the introduction of cryptocurrencies and especially Bitcoin in the market, people started speculating and started learning about these cryptocurrencies and started investing in it. A lot of online platforms have also come up for invest for enabling investing in such currencies. And as I said, that Union Budget 2022 has also covered under its purview the taxation effect on virtual digital assets. So let's get into the main provisions now. So if you see, there is a new section that is created under the Income Tax Act, that is section 247A. Now this section gives the meaning of virtual digital assets. Let's look at the meaning of virtual digital assets. So virtual digital asset means any information or any code or any number or a token generated through cryptographic means by whatever name called, providing a digital representation of value exchanged with or without consideration, with the promise or representation of having inherent value, or functions as a store of value or a unit of account in its including its use in any financial transaction or investment, but not limited to an investment scheme, and can be transferred, stored, or traded electronically. So basically, virtual digital asset is an information or a code, and this code is generated through a cryptographic means. And such a code has some value, has some inherent value in it, and such value can be exchanged with or without consideration. So this code represents as a store of value or a unit of value. Also, virtual digital assets also includes a non-fungible token. So if you see, virtual digital asset also is a non-fungible token or any other token of similar nature by whatever name called. So when you talk about a non-fungible token is nothing but a non-interchangeable data that is stored in the form of ledgers. Okay, so that is a non-fungible token, and then you have or any other digital asset as the central government by notification specified. So this central government may also specify a digital specify currencies or any other digital asset to be covered under this definition. So in simple words, when we see that virtual digital assets are cryptocurrencies or a non-fungible token or any other virtual digital asset as notified by the central government. However, one is to remember that it doesn't cover any subscriptions that you take for OTT platforms, for mobile applications or e-commerce platforms, etc. Now we know that there is that a capital asset under the Income Tax Act is defined under section 2 subsection 14. However, there is no clarification given by the government as to what a virtual digital asset should be classified as. So, as per section 214, when we see a capital asset means any property of any kind held by a person, whether or not connected with his business or profession. So, capital asset means a property of any kind held by a person. So, property means something which has value. So, in the absence of any clarification that is given, so virtual digital asset should be classified as a capital asset. All right. So, therefore, cryptocurrencies, non-fungible tokens shall be deemed as capital assets, and if purchased by for investments by the taxpayer. So, accordingly, any gain or loss that arises from such cryptocurrencies shall be taxed as capital gains. However, an important point to note that if such transactions in such assets are substantial and frequent, so if people are regularly trading in such assets, and then from prima facie it appears that they are trading in such assets, and accordingly income from such sale of assets should be taxable as business income. So there are two views that are taken. One is that if the virtual digital assets or cryptocurrencies are purchased for the purpose of investments, then such investments such assets shall be deemed to be capital assets, and if they are purchased regularly or if the assessee is trading in such assets, then they shall be taxed as business income. So now let's look at the main section that has come up for taxing the transfer of virtual digital income from the transfer of virtual digital asset. Now a new section in the union budget was created, that is section 115 BBH, which is taxing the transfer of virtual digital assets. Now let me make you clear that this section is introduced for taxing the income from transfer of virtual digital assets. So only income arising from the transfer of virtual digital assets shall be covered here. Any other income from virtual digital asset is not covered. Only income that is arising from the transfer of virtual digital asset is covered here. So now what I'll do is I'll explain you the provision of the act. Later we'll go to the bare act of the provision and I'll relate everything that I've explained. So first let's start with the classification of capital gains. Now capital gains, as we all know, can be classified as short-term capital gains and can be also classified as long-term capital gains. So there are certain criteria for taxing, for treating it as short-term capital gain and long-term capital gain. So if the virtual digital asset is held for less than or equal to 36 months, then it shall be treated as a short-term capital asset, and the gain arising from such virtual digital asset shall be treated as short-term capital gain. And if it's held for more than 36 months, it shall be long-term capital asset. Now, the provisions for computation of capital gains is very, very simple. We know that the provision for computation of capital gains is given under section 48. Now, if you see the provision for computation, the full value of consideration is to be taken. That is the amount that is arising from the transfer of virtual digital asset, and only the cost of acquisition that is incurred for acquiring such virtual digital asset can be deducted. No other expenditure shall be deducted. Very, very important point to note that no deduction is to be allowed for any expenditure or allowance except cost of acquisition, and no set off of loss also is allowed from such income under any provision of this act in computing the income from transfer of virtual digital asset. So basically, if we see that the original provisions had some other deductions as well, such as cost of improvement, also expenses incurred on transfer. Such expenses under this now under the taxation of virtual digital assets are not allowed. So basically, let us see what is allowed and what is not allowed. So expenditure incurred in connection with transfer of VDA is not allowed. Cost of improvement is not allowed. Indexation is not allowed. Also, exemption under section 54 is also not allowed. Chapter 6A deduction is also not allowed. However, relief under section 87A can be allowed. Yes, relief under section 87A is allowed because this is a deduction that is from the tax that you're getting. So relief under section 87A can be allowed. Also, Now let us look at the tax rates. Now under section 115 BBH, which is the new section, the tax rate both on short-term and long-term capital gain shall be taxed at the rate of 30%. It's a flat rate of 30% for all assessees. It shall be taxed at the rate of 30%. And when we look at surcharge rates for such income, in case of individual AOP or BOI or an artificial juridical person, there is no surcharge up to an income of 50 lakhs. But if the income is more than 50 and less than 1 crore, then it is 10% for all types of income. If it's more than 1 crore but less than 2 crores, then it is 15%. And if it's more than 2 crores but up to 5 crores, then from long-term capital gains on virtual digital asset, it is 15%, restricted to 15%. And for short-term capital gains and any other income, it is 25%. But when your income is more than 5 crores, then as I said, for long-term capital gains, the surcharge is restricted to 15%, and for other incomes, it is 37%. So these are the surcharge rates for individuals, HUF, AOP, BOI, and artificial juridical person. Now let's look in case of any other assessee. In case of any other assessee, for taxpayer, for a domestic company or a cooperative society, if income is up to 1 crore, we know that when they are opting for a special rate under 115 BAA or BAB and cooperative society under 115 BAD, there is a flat surcharge rate. That rate would also apply here. And for all other assessees, if income is more than 1 crore and less than 10 crores, for a firm or local authority, it is 12. For a domestic company, it is 10. Very important, it's 10 because they are opting under 115 BAA. For any other domestic company, it's 7. Foreign company, it's 2. And other cooperative society, it is 7. And if income is exceeding 10 crores, firm or local authority, it's 12. And for other domestic company, it's 12. And for foreign company, it's 5. And other rates remains the same. So this is the table for surcharge rates. You may refer this. Now let's look at the extract of the section 115 BBH from the budget itself. So let's see. Okay, let's see 115 BBH, where the total income of an assessee includes any income from the transfer of any virtual digital asset. Now, if your income includes any income from the transfer, only on transfer from any virtual digital asset, the income tax payable shall be the aggregate of the following. Now, what shall be your income tax? The amount of income tax calculated on the income from transfer of such virtual digital asset at the rate of 30%. As already said, the rate of tax is 30% on the income from the transfer of VDA, and on any other income that you have, normal provisions would apply, and you have to calculate tax as per the normal provisions. Now, if you read subsection 2, notwithstanding anything contained in any other provision of this act. Okay, so this is a notwithstanding clause which says that no deduction in respect of any expenditure, as we already saw, other than cost of acquisition or allowance, or set off of any loss shall be allowed to the assessee under any other provision of this act in computing the income referred to in clause A of subsection 1. So if you read clause A of subsection 2, it says that no deduction shall be allowed in respect of any expenditure other than cost of acquisition. So cost of acquisition is allowed. Also, no allowance or no set off of any loss shall be allowed to the assessee under any provision of this act. So if there is any loss arising under any other provision of this act, that loss cannot be set off against this income. Okay, so that is the point here. And if we read subclause B, no set off of loss from the transfer of virtual digital asset computed under clause A of subsection 1 shall be allowed against income computed under any other provision of this act to the assessee, and such loss shall not be allowed to carry forward to succeeding assessment years. So now clause B says that clause A said that any other loss apart from this section, any other loss arising in any other provision of this act cannot be set off against such income. However, clause B says that if there is a loss from transfer of virtual digital asset, such loss cannot be allowed to be set off against any income computed against any under any other section, under any other provision of this act. So if you have a loss from virtual digital asset, this loss cannot be set off against the income that is arising under any other provision of this act, and such loss can also not be carried forward to succeeding assessment years. So prima facie, if you see that clause B says that this loss shall not be allowed against income computed under any other provision. So by this clause we understand that loss from VDA cannot be set off from any other income, but can be set off against VDA income itself. Suppose you have two virtual digital assets. Suppose say one you have is a non-fungible token and other is you have a cryptocurrency, say Bitcoin. Now suppose you have a profit from transfer of Bitcoin and you have a loss from non-fungible token. Now can this loss from non-fungible token be set off against the income from Bitcoin is the question here. So here by this clause B, we can see that the loss under this virtual digital asset cannot be set off against any other income under any other provision of this act. But prima facie it can be claimed, it can be set off against income from this provision itself. So that means you can set off the loss arising from a non-fungible token against the income from transfer of Bitcoin. So that is allowed. This was a clarification that was given by the Ministry of Finance, wherein they have said, Ministry of Finance, wherein they said that this loss can also not be set off against income that is arising from any other virtual digital asset. So technically, if you have a loss from virtual digital asset, this loss cannot be set off against any income of the act, including the income from virtual digital asset, and cannot be carried forward as well. So this is a clarification that is given, even though the section appears to say that the loss can be set off against income from VDA, but it cannot. There is a clarification. When I go to the subsequent paras, you will come to know. So this is what I spoke about, the section that was introduced under 115 BBH taxing the income from transfer of VDA. Now I spoke from the viewpoint of capital gains because we assumed the asset to be a capital asset because it was held for the purpose of investment. But now, as I said, that if the virtual digital asset that is there is held for the purpose of trading, that means if you are regularly trading in it, then income from such transfer of virtual digital asset shall be taxed under the head business income. So let's look the concept of taxation under the head business income. So as I said, that if the transactions in virtual digital assets are substantial and frequent, so you regularly deal in such virtual digital asset, then it is to be held that taxpayer is trading in such assets, and income from the sale of such assets taxable as business income should be taxed at the rate of 30%. See, this section 115 BBH is a general section. It's an overall section for taxing the transfer of virtual digital asset. Doesn't matter whether you tax it under the head capital gains or business income, it is taxable at the rate of 30% only. No deduction of expenses is allowed, as already mentioned, but it will be taxed as business income. So it's very simple, and you will just allow the cost of purchase or cost of manufacture in case if the virtual digital assets are mined. Suppose the cryptocurrencies are mined and not purchased, then in that case the cost of manufacture shall be taken as the cost of purchase, and that shall be allowed as a deduction, but no other expenditure shall be allowed. So this was taxation under the head business income. There can also arise tax liability under the head income from other sources in case of transfer of virtual digital asset, but in this case this section 115 BBH will not apply. So under this, the section 115 BBH shall not apply. Why? Let me tell you. See here. Now the Finance Bill 2022 has said that it proposes to include virtual digital assets within the scope of movable assets. Now, first let's understand the existing section of section 56 to subsection 10. Now, the section 56 to subsection 10 is for the purpose of taxing gifts that you receive in excess of a particular amount. So, if you have received any movable property, I'll just focus with respect to movable property under this section. So, under this section, if you receive any movable property for without consideration or in case of inadequate consideration. So if the fair market value of the movable asset is more than the fair market of the market value of the movable asset is more than the actual consideration by 50,000, then such excess, the entire amount shall be taxed under the head under section 56 to 10. So this was the existing section that is there. Now, after the amendment that is made in terms of this virtual digital asset, the budget has also included virtual digital assets within the meaning of movable assets. So now virtual digital assets are also to be treated as movable assets for the purpose of 56 to 10. So accordingly, what will happen is now that if a person receives virtual digital asset without consideration, so if you have received it without consideration, that is absolutely free of cost, then the fair market value shall be taxable. Or if you have received for an inadequate consideration, if you have received for free or inadequate consideration and the value of such benefit exceeds 50,000, it shall be taxable. It shall be taxable in the hands of the recipient under section 56 to 10 under IFOS. So this is also an amendment where this can be taxed under IFOS. But okay, I'll just explain the entire section. Now, when I say for inadequate consideration, we have to determine the fair market value. In case of inadequate or without consideration, you need to determine the fair market value for taxing such income. So for taxable under 56 to 10, the fair market value shall be determined in accordance with Rule 11 UA. Just as you know that for any other assets also, you refer to 11 UA rules for determining the fair market value. Here also you have to refer to 11 UA. And if you purchase from a registered dealer, of course, the invoice value shall be taken. And if you have received in any other mode, then the fair market value of such asset shall be the price that it would fetch in the market. If you sold it in the open market, what would the price you would fetch will be the fair market value on the valuation date. Now, very, very important point to note. This is a very important point to note. Tax under other sources shall be the rate applicable to the SSE, and such income shall not be taxed at the rate of 30% under section 115 BBH, because such income is not arising due to the transfer of virtual digital asset. It is someone giving you a gift and it's not arising from the transfer of virtual digital assets, and accordingly such income shall be taxed at the rate applicable to the SSE and not at the rate of 30%. So 115 BBH shall not apply, but the amendment the budget has included the virtual digital assets under the definition of movable property, and accordingly 56 to 10 becomes applicable. Now let's look at the treatment of losses. We have already read section 115 BBH subsection 2 and clause B, which provides that no set-off of loss from the transfer of VDA shall be computed and shall be allowed against income computed under any other provision. So by this, I've already explained that we know that loss from the virtual digital assets cannot be set off against against any other income. So technically, it should be allowed against income from virtual digital asset, but the the Minister of State for Finance. The Minister of State for Finance has clarified that loss from transfer of VDA shall not be allowed for set off against income arising from another VDA. So now any loss from VDA cannot be set off against any income, and it cannot be carried forward as well. So these were the provisions relating to taxing the income arising from the transfer of VDA. Now lastly, let's look at the TDS provisions as well. So for the TDS provisions, a new section 194S has been introduced, and it is proposed to be inserted with effect from 1st July 2022. Now, any consideration that is received or paid on transfer of virtual digital asset. So if there is a consideration that is paid on the transfer of virtual digital asset, and then the payer has the liability to deduct tax under section 194S with effect from 1st July 2022. Now this consideration is the consideration arising from the transfer of virtual digital asset. Now who shall be the payer? Let's look at the provisions quickly. These are simple provisions. Yeah. The payer shall be any person who is responsible for paying any sum by way of consideration for transfer of VDA. So any person, payee is required to be a resident person. So payee is a resident person. Now what is the rate of TDS? The TDS shall be at the rate of 1% of the consideration. Very important. It shall be 1% of the consideration. And the rate shall not be further increased by surcharge and health and education cess. So 1% is the flat rate, not to be increased by surcharge and health and education cess. Now, if the payee does not furnish his PAN to the payer, then as we all know, there is a specific section called as 206AA, which prescribes the rate of 20% in case the payee does not furnish the PAN to the payer. So the similar provisions will apply here as well. Now, what is the time of deduction? When is the tax to be deducted? So tax is to be deducted at the time of credit or payment, whichever is earlier. Okay, so these are all similar provisions that are already existing in other provisions of TDS. So it's easy to understand. Now, there are specific cases wherein before releasing the consideration, the person who is responsible to pay the consideration has to make sure that tax is already paid on such virtual digital asset. Because why is this provision coming into place is because the person who is paying the consideration is not in a position to deduct TDS. Now, when you say is he not in a position to deduct TDS, what does that mean? So let's look here. So if where the consideration is wholly in kind, okay. Now, if the consideration you're paying is wholly in kind, then how can you deduct TDS? So in that case, the person who is responsible to pay the consideration is to ensure that tax on such virtual digital asset is already being paid by the payee before such consideration is paid to him. Before such consideration that is in kind is delivered to him, or where the transaction value is in exchange for another virtual digital asset. So if there is a virtual digital asset exchanged in consideration for another virtual digital asset, so and there is no part in cash and there is no cash involved, it's just one VDA exchange in case of in exchange of another VDA. So in such case also the payer should ensure that the payer is already paid tax on such consideration. I'm buying a VDA and I'm selling a virtual digital asset. So both the parties have to ensure that the other party has paid the tax with respect to their considerations. So a very, very important point to note. Also, now where consideration is partly in cash and partly in kind. Okay, partly in cash and partly in kind, but the part in cash is not sufficient to meet the tax liability. Okay, so there is an exchange in kind as well as partly in cash and partly in kind, but the cash is not sufficient enough for the payer to deduct the tax. So in such case also the payer has to ensure that the payee has paid the tax on such consideration. Now when I say that the person responsible shall ensure the tax has been paid, now this tax, it's still an ambiguity that this tax refers to the TDS or the actual tax that is at the rate of 30%. TDS or actual tax is still a clarification or an ambiguity that needs to be clarified by the income tax authorities. I hope a clarification might come in the near future. All right. Also, let us look at the exemptions from tax TDS. So as we all know that in various other provisions also there are some exemptions given from deducting TDS, some limits are given. So here also let us see the limits. So if you see any person, the limits for any person, okay, any person means the payer is any person other than a specified person. Okay, we'll see who is a specified person. So this is a general clause. Any person where the consideration does not exceed 10,000. Okay, so if the consideration does not exceed 10,000, then there is no TDS that is to be deducted. Okay, and then let's look at a specified person. Who is a specified person? For a specified person, the where the consideration does not exceed 50,000. So the limit for a specified person is 50,000. For any other person is 10,000. So generally it's 10,000. For a specified person it's 50,000. Now let us look at who is a specified person. Okay, so specified person is nothing but an individual or HUF who does not have income from PGBP. Okay, so he's an individual or a HUF who either does not have income from PGBP, or even if he has income from PGBP, the sales or gross receipts or turnover does not exceed 1 crore in case of business and 50 lakhs in case of profession. During the financial year, immediately preceding the financial year in which the VDA is transferred. So in the year in which VDA is transferred, take the preceding year. In that preceding year, if the sales or gross receipts of the payer does not exceed 1 crore in case of business or 50 lakhs in case of profession, then he is not required to deduct TDS. In such cases, but the limit is 50,000. Okay, for such persons, the limit is 50,000. So specified persons are those who does not have income from PGBP, or even if they have income from PGBP, in the preceding financial year, the turnover does not exceed 1 crore in case of business and 50 lakhs in case of profession. So these are the limits. But we know that the provision of TDS is applicable from 1st July 2022. It's applicable from 1st July 2022. But the limits are to be checked. But the limits are to be checked for the whole year, even though the provision comes into effect from 1st July 2022. But the limit of consideration, very important, the consideration does not exceed 10,000 in the financial year. Okay, this is in a financial year. So for the financial year 22-23, even though the provision comes into effect from 1st July 2022, the limit of 50 and 10,000 needs to be checked from April 2022 itself. So an important point to note that. So this is a table that I've given for the threshold limit or the consideration. You may also refer this. And lastly, we see where a transaction is subject to TDS under 194O. Okay, 194 is a TDS provision for e-commerce operators where they are liable to deduct TDS. And 194S is the section that I've just explained to you. So if a transaction is subject to TDS under section 194O as well as 194S, then tax has to be deducted as per section 194S. When 194O shall not apply accordingly. And also TAN is not mandatory for a specified person. When I mentioned a specified person here who is an individual or an HUF, so this specified person, even though this specified person does not have a TAN, still he can deduct TDS using the PAN. There is no requirement to have a TAN number. He can use his PAN for deducting TDS. So these were all the major provisions that I discussed that was brought up in the Union Budget 2022 for taxing the transfer of virtual digital asset. So to just conclude, I hope you understood all the points very well. If you have any doubts, you can please put up in the comments below. Also, some other important clarifications that I would like to highlight is that also in case if some people ask that if my basic exemption limit, if my income doesn't cross the basic exemption limit, is tax under 115 BBH applies? The answer is yes. Even though your income is less than the basic exemption limit, tax under 115 BBH still applies. Also, as already mentioned, threshold limits for TDS are to be checked from the beginning of the previous year and not from the date when the TDS provision comes into place. Also, one important point to note that companies who have opted under the provisions of 115 BAA and BAB, even for them, tax under 115 BBH applies. All right, because I've already explained the surcharge rates to you for that as well. Also one important point to note that if you're making payments for facilitating the transfer of virtual digital assets, now you know that there are a lot of online platforms that are in place where you can buy and sell virtual digital assets. So if you are paying any payments to such online platforms or to such brokers, those are not subject to TDS and those are not taxable. Only the consideration for transfer is taxable. I hope I have made myself clear on this point. And yes, I hope that's it for this session. I hope you understood all the provisions. If you have any comments, as already said, please put down in the comments below. And for today, that is itself from my side. And I hope to see you next time with an other important concept that comes up. So thank you very much. Take care. Bye.